So if money doesn't work, what the heck can you do to try and figure out where the next move in the stock market is? Well, what I did is I started analyzing stock price movements on a daily basis for the past 25 years to see if I could discover patterns that would give me some sort of clue as to whether there would likely be more upward or downward pressure in the market. And I've talked about this in my weekly, which we started producing the results back in May. And here, this red line shows, I could call it the probability that the market says, that the model says the market is going to continue to go up. And the interesting thing is, for 5 months after I started following this very closely, this probability was above 80% consistently without falling down on a 5-day average. And the market has continued to go up. And as you can see, although there's been more volatility, most of this volatility has occurred with a positive bias toward the market. And that's exactly what's happened to the market. So I started using this to try and get some sort of a feel for whether a market that's very overvalued could continue going overvalued. And the answer was, I think it has worked well. I think it's another interesting tool, so that even though the market might be overvalued, you might not want to be out of certain aspects of it. It's a tool that can allow each person to judge the risk for themselves based on their own particular situation.